Good morning once again, everyone, and thank you for taking your time in this early morning on Wednesday morning, joining our webinar this morning. On behalf of the APS team, I'm pleased to welcome you to our Market Pulse presentation for the first quarter of 2026. And we appreciate having such a strong group of very mixed background of developer, investor, and partner in the industry joining us from all over the region this morning. For those who haven't met, my name is 𝗠𝗿𝗀𝗲𝘀. I am the Managing Director at APS Cambodia, formerly known as CBRE Cambodia. I have been with the firm in the last eight years, and it's a pleasure to be hosting today's session once again. You may also notice that we are presenting under our rebranded identity under APS brand, and we are excited to share this new chapter with you. Before we begin, let me quickly walk you through today's sessions and agenda. We'll begin today's session with an economic overview, quickly going through the economic landscape, majorly globally, but more specifically how it impacts Cambodia market. And then we'll jump right into sector specific, specifically starting from commercial market pulse. And then my colleague 𝗠𝗿𝗀𝗲𝗂𝘀, who is our managing manager for research and consulting department, will go through with you checking the pulse of the residential and industrial market. And then followed by a Q&A session where we engage with audience Q&A. So make sure that you send in your question into our Q&A or chat box in this Zoom session. All right, before we dive in, we'd like to hear from you first. And we'd like to host a quick poll just to make sure that you're alert and up in the early Wednesday morning. So I've launched a poll. The poll should appear on your screen right now. And we'll start with the first question. On a scale of 1 to 5, how full is your tank right now? We usually start this question with coffee in the morning, but I think tank is probably a more relevant topic for today. We got some people sending in 100%. I think that's great. In Cambodia, specifically, we usually fill in our tank on the weekends because every Monday new price will come in. And then in the last 3 weeks, it has been gradually increased. All right, we have seen quite a split in between actually all level of fuel tank. All right, thank you for your engagement. Moving on to the second question. Have you seen any improvement or deterioration in Q1 2026 in your business or in overall? We have seen some positive, slight improvement, no changes. Some people said that they've seen slight deterioration. Some people are starting to say major disruption also. So please keep sending us your view on this question. And number 3, where will you put your money in 2026? A lot of people are choosing what money. I'm showing everyone is finding that right now. Some people still want to put money in gold. Very interesting. We'll touch on a little bit on the gold price this morning also. 40% of you saying that you're putting money in the bank. That's smart. Still. And 10% under the bed. Well, just make sure that you won't lose it later. You know where to find it. And last question, which sector do you think will recover first? Okay, we are seeing industrial and logistics, trading, banking and finance. Where are the real estate guy? Okay, it's very sad right now. No one are choosing real estate. So sounds like we got some of this in our slide also. All right. Thank you for your engagement this morning. Let's now kickstart our presentation. All right, a quick disclaimer, we do not know everything. We know something and we like to share and we keep learning. So if you see any errors in data, we appreciate you give us an alert, or if you want to discuss any certain topic further, please feel free to reach out to us after the event also. All right, so let's take a quick glance at what have happened in Q1 2026. Our team here has selected some news headlines that highlight what the key pattern in Q1 2026 and have grouped them into key theme. Energy, of course, energy price and energy security must be the two keywords that you have heard most in the last month. It has dominated the headlines, and obviously the ongoing tension in Middle East have sent a shockwave across the globe. And we are seeing that government are taking different approach in adjusting or coping with this crisis. We're seeing countries, going through their security by finding alternative source of supply, working on incentive and taxes relief to cope with the hike in price. We have seen countries revisiting partnership and strategic supplies strategy over the last month or so. And for Cambodia specifically, we have seen drastic change in terms of price. However, the supply is still somehow maintained for the overall operation in Cambodia. We'll touch a little bit more on the energy topic in the coming slide. In the financial market, predictability, of course, remain the what investor value the most. And apparently, there is a short supply of that right now. Volatility has picked up across the globe, especially due to the geopolitical risk. And in Cambodia, the challenge has also been more structural, such as the risings of NPL is still remain a concern. We're also starting to see stringent enforcement on illegal financial activities, which also again are sending a lot of concern into investor. But also we're also seeing some softness in consumer confidence. Now, outside of the NPL issue, the broader system remain relatively contained and resilient. In the next theme that we notice also in industrial market, Cambodia, despite all ongoing uncertainty, we are seeing industrial sector continue to be resilient and growing, as well as just looking through the FDI and QIP data, we already see that there's an upward trend across 2025. A little bit more on the macroeconomic, we like to look at the key indicators. Overall, the GDP growth and inflation is still relatively maintained. We are seeing that the latest forecast by World Bank still forecasting Cambodia growth in 2026 to be around 4.3%. And FDI and QIP, as I mentioned earlier, throughout the last year has been on the upward trend. However, it was noting that this report and this trend that we witnessed happened before the crisis or disruption around the geopolitical changes. So it's probably too early to say how this crisis will play out into Cambodia macroeconomic landscape. On the liquidity and rate, we are seeing that interest rate remain elevated, reflecting the tighter liquidity condition and in the banking sector. Although you also probably can notice that since the beginning of 2025, interest rate in Cambodia, both term deposit and loan rate, are adjusting gradually downward. This may be reflecting of commercial banks in Cambodia trying to gradually recover investor and loan performance. In the investment and asset aspects, when we look at the residential price index or PPI issued by the National Bank and the gold price, we can see that residential price has contracted a little bit and gold price remain largely volatile, especially in the last month and or 6 weeks, that we're seeing gold price been dropping down and rising up and then dropping down again. And as we see in our poll today, a lot of people are still interested in investing in gold as it pursued as the long-term preserve of value. Onto the key real estate indicators. Here's a quick snapshot of where the prices and rental and occupancy are across the key real estate subsector. Overall, we are seeing a mixed picture. Office and retail rent showing some stability, while residential segment, including condominium and landed property, especially twin villa price, has contracted slightly. I'll keep this slide or number at the high level for now, as we will dive deeper into each segment in a later section. Now, I want to introduce this slide in the beginning of our presentation today, because building on what we've just seen earlier in the key indicators, it's important to understand what brought us here. So let's take a quick walk down the memory lane for the in the last 15 months of in Cambodia economic aspect. Cambodia has faced a number of shocks, both internally and domestically, from credit slowdown to trade disruption, tariff turbulence, and then now most recently to geopolitical tension and financial system stress. Of course, we couldn't know what comes next, but I think the key takeaway here is clear. The resilience and preparedness are the absolute key for business in 2026. So in short, plan for rainy day while stay ready to capture opportunity when the sun returns. Although you can say the sunny day may still some distance away, because it's important also to recognize what continue to shape the environment in the coming days of 2026. In this slide, we recap the last 443 days of Mr. Trump administration, which is, you can recall, less than 1/4 of his whole administration. And we already seeing, a lot of, President Trump, love him or hate him, you can see he already have a global impact and hitting almost everyone life in the planet Earth through a series of usually described as aggressive and often unpredictable measures or policy move. We can see that geopolitical landscape and economic landscape worldwide is being continued to be volatile. And in this is key point. While shock can happen very quickly, as we can see in the last, several policy turn, recovery and policy reverse or normalization may take much longer. And that's have a very direct implication for investment decision, and especially for real estate decision, which is usually need long-term planning. In the immediate term, the most intensified crisis and challenge that everyone is facing right now is the energy price. Energy price is one of the most disruptive force of all, because it related in so many sectors and almost everything around our daily life. Particularly in our part of the world, Asia and Asia Pacific, we are heavily relying on the energy that come out of the Strait of Hormuz, as you have heard many times already through the news. We see roughly 30% year-on-year increase in price in term due to the disruption in this small choke point. For Cambodia specifically, as a non-oil producer ourselves, the rise of oil price locally are now approaching the previous high during the COVID crisis, as you can see as a result of comparison here. And the impact of this energy price hike is unavoidable, and it will actually impact a lot of sectors. And the next slide will tell us why it matters. What matters is the ripple effect of this rising oil. So in Cambodia economy, as you can see here, what is being hit firstly is rising of inflation, trade disruption, and a squeeze in consumer, especially household consumption. At the same time, government has stepped in to elevate the situation and relief. Hence, we also seeing a tax relief incentive being introduced, and in turn, that would also result in fiscal pressure for the government with lower tax revenue also. And this will continue to lead into other sector, especially for our sector, construction and real estate. We can expect that there will be a softer demand. There will be a delay in decision making because everyone is, couldn't predict what's going to be the next pattern. And then the impact will continue to flow into the manufacturing, industrial and logistic, rising of production costs and operation costs. And of course, one of our main economic pillar, which is tourism, with higher travel costs and a number of visitor fall, or in other words, their budget being cut down. And then again, we'll loop into the demand for hospitality and commercial property. In the financial market again, so far we have looked at a lot of pressure driven by the cost of production. But when we look into financial market, the M2, broad money M2 represent the total market being circulating in the Cambodia economy, including cash, saving, and deposit. After a period of expansion, we have seen that M2 has peaked and started to decline slightly in recent months. That's a sign suggesting that there's a more cautious environment around investing in Cambodia. There's a slower credit growth, tighter liquidity, and more selective lending across all commercial banks. In practical terms, this means that there's a less capital flowing into economy and especially into real estate market. Despite tighter liquidity and rising uncertainty locally within the locally used fund, we're seeing that influx of FDI remains strong, with last year number volume hit 5 billion, representing a 16% increase on year. However, it's also important to note that this very much happened before the current crisis being hitting. On the QIP, in addition to investment, we're also seeing that QIP follow a similar trend, with last year new investment being approved hit up to $900 million USD, with over 100 projects being approved. This trend is also mainly driven by industrial and infrastructure. Again, these are very crucial aspects of long-term growth sector. However, we should note that the immediate translation into economic benefit and activity may have a lag. And finally, in macroeconomic sector, we'll be looking at the tourism, one of Cambodia's key economic pillar. We're seeing a decline of up to 15% of international tourist arrival in the last year, with only 5.6 million international arrival throughout the 12 months of 2025. This suggests that while the movement is still there, spending power and travel confidence are being impacted by the series of global shocks across the globe. For real estate, particularly hospitality and retail demand, it really reinforced the demand for hospitality and commercial real estate property. So we'll see how this play out into the following segment. So to close off this section across the macro, financial, investment, and tourism indicator, the message is quite consistent. The market is adjusting under pressure. So with that context in mind, let's now turn into each real estate subsector and see how these trends are being playing out. So let's move on to office market pause. In the last 3 months, the first 3 months of 2026, we have seen a number of new completion, but also more interestingly, the new launches of new commercial projects, namely GIA, which is located in 𝗠𝗿𝗲𝗄𝗃, the new satellite city being actively developed. FTB Tower coming up to completion very soon in this year. Norodom Business Center, both are locating in a quite a center of the city, and Royal Group Central also and GDT Tower are recently completed. In the overall Phnom Penh office supply, we are seeing that supply continue to reach new highs every quarter. And specifically for 2026, we're expecting grade A supply to expand quite substantially. Actually, we already see that 55% of the expected supply in 2026, which is around 144,000 square meter, already been completed, more than half of it. So, and grade A is clearly taking a dominant in the new supply completion right now. And if this trend persists, by the end of 2026, we'll see the total market supply for office in Phnom Penh, including strata title and stratally owned office, will hit 1.3 million square meter. Of course, the market supply will reflect in occupancy. And as you can see here, occupancy rate has been quite resilient. As we can say, the market is not collapsing, but it's clearly separating winner and loser very quickly. With the new supply being introduced, quality and service are being improved, especially across the newer grade A completion. We are seeing that occupancy in grade B and some older grade A is being impacted, and Prince Group being under clearing process by the government has also sending out a number of tenants in their premise into capturing some of the better quality, better due diligence, better background of developer as well. So reputation is also coming as a very crucial due diligence process of tenant also. Similar to occupancy, rental rate is reflecting the introduction of new office supply currently coming into the market. Very consistently, we are seeing that there's a continuous flight to quality across the board. Business are moving from older grade B and then moving into the newer grade A, especially within the city center area like Dong Peng, Diamond Island, and upcoming location like 𝗠𝗿𝗲𝗄 are being under a close look right now by tenants that having planned to move within 2026 and 2027. So it's clear that we can see across the board here, grade B and especially grade B and CBD and non-CBD are seeing the largest hit in terms of rent reduction, up to 5% and 7% respectively. To close off the office section, there are 4 key shifts that we would like to highlight during this quarter. Number 1, grade A office supply is reshaping the market. That's a trend that we believe in very strongly, because the continue of rising of grade A new supply is intensifying the competition. The quality expectation, service expectation are all rising across the board. So it's require existing building to upgrade and update their service gradually. Number 2, the demand is becoming even more intentional right now across the tenant. Tenants are no longer just looking at the space and price, but they are also looking at amenity being offered in the building that they're coming into also. Number 3, tenants are now choosing landlord not only because of their building, their service, but also the reputation, the background of the landlord, and their other or relevant business. And lastly, trends number 4, the cost sensitive continue to drive the negotiating power between landlords and tenants. With tighter budget, tenants are more price sensitive than ever right now, and shifting leverage toward occupier and putting more downward pressure on the rental rate. That's what we can expect in the coming quarter for office market. Moving on to check retail market pulse, very similar to commercial market, office market earlier. We are seeing new phases of a new project being announced. Chip Mong Group is announcing their new upcoming 6A, National Road 6A Mall. GIA area, which we mentioned earlier, also have a retail component in it, and GDT and K Mall breakdown. These are two newest retail project completion in the last quarter. In terms of retail supply, we still continue to see a gradual return and gradual completion, although the rate of completion is not as sharp as what we saw in office market. And in the coming, for the whole 2026, we're only expecting up to 36,000 of new supply being completed only. And up to 45% of those already completed across due to the completion of GDT Tower and K Mall breakdown. And we can expect that the supply continue to grow in a modest and slowest way, as we can see that landlords are now being more cautious in introducing a new supply. I think that this is could be my most favorite slide ever for retail market for every presentation, because in terms of when we look at the retail expansion and movement, we continue to see brand expansion continue to be very active, actually up to 43% new branch expansion just in the first 3 months of 2026. We also continue to see new brand entry, and noticeably a lot of new Cambodian introduced brands from local conglomerates and younger entrepreneurs, especially in the realm of convenience store and supermarket chain. And we expect that probably not all of these brands will do well or equally well in the next 2 to 3 years. We may see some winner, loser, changing face still. But I think for the consumer, they are the winner here. So in terms of choice and in terms of pricing and affordability option is very vast across the board. Occupancy, although we're seeing a new expansion and new brand entry, we still see that occupancy continue to soften, especially now with a new supply that coming in Q1 2026 and continue to see across 2026. New supply continue to add vacant space into the market, and we can still see strong interest and preference towards standalone and or like mall front location. Some larger retail centers or retail podium may continue to suffer in the coming quarter. Rental rate trend is also taking moderate stand, suggesting reflecting the overall occupancy pressure. As you can see here, as we mentioned earlier, prime high street or standalone store remain the most sought after location. Hence, their rent has the only segment that has risen up to 6%, but across the board, the type of retail continue to moderately adjusted. To close off the retail market, we like to introduce 4 trends also. First of all, we're seeing local F&B operator continue to develop their own brand identity and introducing or incorporating the cultural aspect into more and more into their business and marketing activity. Number 2, we're seeing a number of local convenience store and international convenience store as well actually continue to grow. Number 3, trends, we are seeing high traffic, especially among tourists in certain location, especially retail high streets such as BKK1 along the riverside and surrounding the walking street across the tourist area along the riverside and around the Royal Palace. And the last trend that we are seeing is that very interestingly, education, whether it's a full-time school or extracurricular activity, starting to become one of the key anchor tenant in retail centers, taking quite a significant space and filling in retail center, but also acting as a magnet to attract new footfall into retail center as well. So with that, I would like to conclude my presentation for this morning and like to hand over the floor to my colleague 𝗠𝗿𝗂𝗧. Over to you, 𝗠𝗿𝗧.
Thank you, Bokesa, for a very detailed presentation and touched on the economic side and also the commercial side. Before I start, I would like to properly introduce myself again. My name is 𝗠𝗿𝗀𝗲 and I am the Manager of Research and Consulting Department at APS Cambodia. So the first part and the first section that I will be covering is the residential market pulse. While residential is such a wide word, within this sector, we will be covering three main sectors. First is the condominium sector. Second is the landed property sector. And the last sector is the service department sector. So let's move on to the condominium sector. This slide is showing the completions that is currently pushed out into the vertical living market. Now, Condo Samsok is the first project that is launched, and also the milestone for 𝗠𝗿𝗸𝗀𝗲 to enter the vertical living market. This product has been launched in less than a year and is now currently completed and have already handed over to some of the buyers in the market. The ramp up is also something that I would like to point out as well, where such a vertical living market is a market that is very new to this developer. However, the ramp up speed from the first project up to the fifth project, as we heard of as of Q1 2026, by this developer has been spread out. So what's the question that I would like to answer is, how is this ramp up make sense in this market? Well, this is personally speculative from outside, but we believe that this is the market that show the strongest demand, where the absorption rate is very healthy across the market. In the following slide, you will see a clear picture of why this market is very healthy. Well, on the right side is Diamond Bay Garden. This property is a really good property located on the riverfront. I'm pretty sure everyone has already drove past the Noria new bridge, where this project is positioned on the left side. This building is expected to complete within 2026 as well. So in terms of completion, we only see one project as of Q1 2026. This is an additional 1,800 unit plus into the market. This is a 26% quarter-over-quarter growth rate. Move on to the next slide. So on this slide, we are looking into the new launches that is currently launched within the first quarter of 2026. Now, new launches is now concentrated mostly within the affordable and mid-range. However, if you notice in this slide, we are seeing some of the new high ends that has launched in 2026. This is also signaling the pickup and a slight recovery in terms of demand for the high end. However, you will be hearing me stressing and talking a lot about the affordable and mid-range segment, where the market is the most healthy. Why is it healthy? I believe that the developer is now seeking and more understanding and more well-adjusted to the new demand within the market. The demand landscape, if we compare to the pre-COVID period, is very much different. The concentration of international investor and the investment products in the market is now subsided. And the products that is currently being pushed out or currently being absorbed in the market is more concentrated within the buy-to-use segment. While buy-to-invest to get a return is still being spotted in the market, but it is very much more less in terms of popularity. This is also reflecting in terms of the drop of the investment yield, where in pre-COVID period, we are seeing the investment yield is very healthy. The minimum is around 8%, and it could go up to 12 to 13 to 15% of the investment yield. But however, in 2026, the investment yield is now dropped to approximately 6 to 8% max, where this percentage is very much unjustifiable and it's not deemed as attractive as before. So the products that we are seeing is more reflecting and representing the current market, where we also seeing a growth in local openness in exploring the vertical living market. Now we are seeing the population is now pushing older generation forward, where 50% of our population right now is dominated by Generation Y and Generation Z. We are the new demand driver in the market, and we are more open, we are more explorative, where vertical living is deemed to be more acceptable for us. So now the products from the developer point of view, the developer has to understand who are they selling to. The market is not the same, where these new launches is reflecting that understanding from the developer side as well. This is also what I already touched on. This graph is very fun to look at. While from Q1 2022 up until Q3 2024, the market is very much at a stage of wait and see from both sides of the market, from the developer side and also from the buyer and investor side. However, in Q1 2025, we have seen that from the developer side, this is a stage of realization where there are actually demand in the market. And in order to be successful in this market, you will have to understand the demand and push out the products that is currently can absorb in the market. Now, Q1 2025, we have seen a dominant of affordable with a mixture of mid-range, where in Q1 2026, we are starting to see the comeback and the return of high-end market. On the supply side, this is a general overview of how the growth of the supply is currently doing. In terms of completion, it's also very much reflect the absorption in the market. Now, I would like to stress that this product is a upland sales product, which means that the completion is reflecting the absorption and the health of the absorption rate. Now, the product will be able to complete into the market if the sales rate is achieving a point where the construction cost can be justified with the return of the investment. We will keep seeing this trend moving forward. However, from our point of view, we will be expecting the completion to be more concentrated across the affordable and mid-range. I also want to point out the mass market, the market driver here, is still dominated by mid-range. Now, mid-range, since pre-COVID, mid-range and high-end is the most attractive products that has been introduced to the market. However, the pickup of the affordable is expecting to ramp up, and the percentage share of affordable is expecting in the near future, in the next 3 to 5 years, will be keeping increasing, and the share will be justified to the current mass market of mid-range. However, as of Q1 2026, mid-range is still the dominant in terms of completion in the market. Let's move on to landed properties. I believe that 80%, maybe 90% of the attendees in our event is Cambodian. And I believe that you agree that landed property is still the number one go-to when you first think of buying a first property. I also want to point out these are the products that's currently being completed into the market. But before I move on, I want to explain what is the word completion here. So previously we wait until the whole development is already completed and handed out to the buyer before we can count them as completion. But in this slide, we also counted some of the projects that is already completed a portion or phase that they have been introduced to the market. So we can properly reflect the actual market movement. So for an example, Vùng Resident is a project that located to the southern area, closer to the new international airport. This project is currently still ongoing, but some of the products such as the commercial building and the shop house area has already been completed. So we should start counting them as a completion into the market. I also want to divert your attention to concentrated. Now in Cambodia, it's much more different from other more mature markets, where a buyer is seeking products that is further away from the airport because of the concern of the noise pollution. However, here in Cambodia, the development is seeking the location closer to the mega infrastructure, not only just counting the new international airport. We have a couple of major infrastructure developments, such as the new access road to the new international airport. But the noise pollution is never been a concern because from my perspective, our market is more focused on the capital appreciation of the product. Now, capital appreciation is reflecting the high traffic flow, more density of residents in the area, more activity, more commercial activity in the area. So this is where the developer is chasing, and also the buyer chasing. Now, in the next slide, you will see a more transparent answer into this, where this is just the completion that's currently pushed out into the market, where all this product has been launched 3 or 4 years prior to the completion. So let's move on to the next slides, where we will look into the new launches of landed property. Now, as you can see, the concentration of new launches of these landed property products are more concentrated in the southern area. From our perspective in this market, we believe that southern area will be continuing seeing new launches because the land price in the area is still very much minimal for the developer to be feasible in terms of introducing a more affordable and located a bit in the mid-range products within this area. So what's the future outcome of this area? Now, in the trend of the real estate market, we see the same pattern. The residential come first, and then the commercial will come later. This area will be, I wouldn't say strongly, but it will follow the pattern of the Russian Boulevard that's connected to the old international airport. Now we have started seeing some commercial activities coming into the Hun San Boulevard. As you have seen across the road, we have seen a lot of car showroom has been established there. And there's a lot of commercial activities such as Aeon Mall and also a couple of community mall along the way, and also some of the high-end residential from key market leaders such as 𝗠𝗿𝗀𝗀𝗲𝗏 and also Chipmore Group. So commercial will comes after this area has been populated and the demand is currently being supported and can be supported for those products, commercial product to come in. So I will not go through much on this slide. It is very much the landed property supply as of each quarter. The completion is very much not as aggressive as before. because just like I mentioned earlier, this is a upland sale product and the completion will reflect the actual absorption rate in the market. While what interesting is that within the landed property market, it is very much split 50 to 50 between affordable and mid-range, where high end is still a small and niche market player. I also want to reflect back to what we mentioned earlier, before everything has happened, where the market is now more stabilized. We believe that the market is heading toward the beyond the high end, but more going to the luxury market. But now when we reflect back to the current market and also the speed and the ramp up of the market, we believe that this is not going to happen anytime soon. Or if it will happen, we see some of the luxury market entering. However, the performance is still very much very slow. And this market will be coming into the market, but not anytime soon. I believe that my time is reaching the time limit, so I will go through a service apartment market quickly. Now, service apartment market, from my perspective, is the most healthy market in terms of the balance between the demand and the supply. It is not oversaturated on the demands on the supply side, while the ramp up is very consistent across the board from pre-COVID, during COVID, and post-COVID. In Q1 2026, we are seeing a new upcoming product called 𝗠𝗿𝗄𝗲𝗄𝗏. This project is a Grade B service department located in Dong Pinh and is expecting to complete within Q2 2026. And the rentals, as we have observed, is very much fitting and also very competitive in this market. We also see some international branded operator from Citadine in Vuastan is planning to start their operation within 2026 as well. So we are keeping our eyes out for this project. UC88 Windham Garden is also the other branded residence that is also planning to complete and open their operation in Cambodia as well. Now, I also want to touch on some part of this as well. Why is it taking so long for this branded operator to start the operation? Now, the operation setup it takes quite a while because the structure is very much different from a branded resident to branded resident. Some branded residents, they will need some time to do their fit out since they have their checklist of criteria that they have to meet before they can start their operation. So please be patient, but of course, they will come into our market. On the rental and property price is very much stabilized. It is not a drastic change of 5 to 10 or 15% as in 2022 and 2023. We believe that the market will be stabilizing in 2026 and hopefully that in 2027, we are starting to see a more consistent upward adjustment quarter over quarter. I also want to divert your attention to the rental market. Now, from our perspective, after we have seen the pickup in terms of inquiry in the rental market, we have seen a pickup in the demand across both condominium for rent and service apartment for rent, where this product is currently the hotspot for our inquiry. So it's also reflect the market quoting rental rate for condominium and also for service apartment, where we see some quite consistent of the upward adjustment for the rental rate as well. So the key takeaway for the residential market is that the reputational developer projects sale performance still improve. Now we have already stressed about this trend a couple of times already, is that in this market, it is not an easy market to enter. Now, in order to be successful in this market, you will have to build your reputation, your trust, especially after what has happened in 2025 on moving on to 2026. Reputation and trust is the key to make sure that your sales performance is ramping up. So we have seen in the market already where the successful is being seen in across local developer where their name is already well established. It is harder for new developer, new names to enter the market, but it is not a no. I mean that if you want to join, if you want to invest in this market, if you want to inject your capital in this market, please maybe talk to us first. Maybe understand the market, understand the consumer, understand the buyer, understand the landscape of this current market and what is to be expected in the future. This is how you will be successful or be competitive in this market. On the second part, buyer has greater trust in local experienced developer. I already touched on this as well. So we will go on to the third part. Developer enter the market will be better market positioning. I believe that I already touched on this trend as well, where developer will have to be critical in terms of understanding the market. It is not an easy market to enter as the pre-COVID, where the products can be introduced and be sold out within 1 year. This need a lot of study. This need a lot of understanding of the market. Now, on the landed property side, developers started to launch a smaller phasing, sometimes 10, sometimes 30 units per phase. This is showing a sign of slowdown in terms of demand for landed property as well. Now, affordable property, I already mentioned that Generation Y and Generation Z is more open to more affordable and mid-range products. This is transparent and high-end product is more focused on the investment and investor side, or those who prefer to have a better located products and a better fitting out products. We also seen a lot of sport complex facility in the use as an amenity, where this is also a consistent trend across the newer generation, where sport and outdoor activity is very much favorable. I believe I'm running out of time. So let's move on to the last section, is the industrial market pulse. On the industrial projects launches, we have seen that there's a lot of support from our government. On the Kanaya Special Economic Zone, this is actually not a new launch. This is a repositioned. Now, previously, this is a project that is positioned within the logistic park, but has now transitioned to special economic zone. Speculative from the market, I believe that this is also shows that the demand from the market is more concentrated to the manufacturing side and also the export oriented side. Moving on to Phnom Penh Logistic Complex, this is a project that has already been granted and located in Kampong Speu. This project will be mostly focused on the logistic tenants and is aimed to establish a centralized logistic hub in Cambodia. These projects will be a challenge market to enter. However, will be a great addition to our industrial market, where logistic hub in Cambodia is a need, especially for expanding, moving on from just local industrial into more warehouse. So this slide, I will move on quickly. We have seen that in 2025, 2026, the green lighted special economic zone is still ramping up heavily. So we try to question why is that, since in 20 2025 to 2026, the market from the macro, from the international situation, the war, these are the matter of why this special economic zone is still being green lighted. Now, from outside, we believe that from the developer side, they believe that this is just a temporary issues and it will be solved. It will not take up to 3 years, while this development is a long-term investment. In special economic zone, this is not a 5-year development. This is a 10 to 15-year development. So this is a future development where currently, if there's an opportunity for them to get the green light for special economic zone, they will. This slide is very much interesting, and I also want to touch on the gap between the cost of setting up here in Cambodia. While in special economic zone, the rental in both sales price, by sales price I mean long-term lease, and on the ready-built factory rental rate is also much lower. The gap between these two products is from 14% to 18%. So now, why is that? Well, in Cambodia, special economic zone is offer more a complete setup. You're looking at more reliable infrastructure that's already established by the developer. It has better power stability, and it has stronger logistic connectivity, better located. And on top of that, the regulatory process is generally smoother with custom support and investment incentives that's being offered. So it's especially attractive for export-oriented and manufacturer. And for ready-built factory, this become more relevant. Being in a special economic zone with less setup risk, everything is already in place. So the setting up process is much smoother and quicker. On the other hand, standalone location is still more cost efficient. While this is very much a preferable depending on the tenant preference. However, if they choose to seek a more cost efficient standalone outside special economic zone is a way to go. Now, I want to touch on this slide very quickly. However, this is a very interesting slide. Why is it interesting? Because this is a interview that we have done across market expert, across logistic, manufacturer, and the government side as well. Now, the higher is the better in this rating. This is the question that we have asked to these experts of what is the areas that they think has already well established and where's the area that needs improvement. For the areas that needs improvement is still infrastructure and logistic. While we have seen a lot of infrastructure development has been introduced by our government, it's still insufficient enough to support and to improve and enable a more efficient logistic side. One other thing is ease of doing business. I have seen that our government has been very actively digitalize our process of setting up businesses in Cambodia. That is a good thing, and I hope that we start to see ease of doing business in Cambodia to get more efficient, and also the rating in the ease of doing business done by World Bank is started to climb, because right now we are placed at 100 and over 100 place. So this is the area that we need to improve as well. Labor force, despite we have quite a lot of labor force, however, the quality labor force is still a concern. Now, in order for the manufacturer to set up here in Cambodia, they will need to over and go on the extent to do and conduct a training to make sure that the establishment of this manufacturing will go smoothly. Now, labor force is in need of improvement as well. Go quickly on the government long-term vision. This slide had already presented before, but I just want to quickly point out is that the government has the vision to improve our logistics. And this is the plan that the government has been set since 2023 up to 2030. Now, the government has allocated a large portion of budget for these products, for this infrastructure development. We have seen some of the movement on the expressway. So there's a couple more expressway that's coming up. There's a lot more railways projects that in plan is currently under study as well. So I believe that this is a really good, well-rounded strategy from our government to make sure that the logistic improvement is necessarily see light of day. I want to go quickly on the trend. Recently, we have seen our government started to reduce tax in terms of import tax on the green-related products and especially more concentrated on the electronic product. So why is that? Well, our government is very much focused trying to climb the value chain in the industrial sector. But do you think that our government is trying to compete with Vietnam as a manufacturer hub? No, of course not. Well, our government is trying to be what's so-called Vietnam plus one. Now, Vietnam is very well established in the manufacturer industry. However, we are planning or aiming to be the assembly side of the value chain. Now, this tax cut will make sure that the established of this assembly plan will be more cost efficient and cost competitive in terms of export value. So the products that's currently been reduced in terms of tax are EV car parts has reduced to only 7%. For the EV car has reduced to zero tax import tax. So this is a good news for a new chapter for our assembly market within the industrial market. I would like to close off my presentation from residential to industrial, and I would like to deeply thank you for your time joining our session today. This is our team. My name is Kim Sia again. I am the manager of research consulting, and my team, Mr. 𝗍𝗂𝗲, is our senior analyst, following by 𝗍𝗂𝗲𝘁, our analyst, and 𝗍𝗂𝗲𝘀, and an analyst as well. Our team is currently being led by Ms. 𝗠𝗿𝗀𝗲, our managing director, and we are offering a research and consulting service. We could conduct a report and provide a more insightful understanding of the market if you would like to understand better about each area of any market that is related to real estate and outside of real estate. So I would like to thank you, and we can move on to our Q&A section.
Okay, thank you very much, Kim Sia, for a very insightful checking pulse of the residential and industrial market. Actually, we have had some question kicking in already. To give Kim Sia a rest, I would like to pick up on some commercial real estate market question that I've started to see. Okay, so first question actually is on tourism number. I'd like to answer this one first. It's maybe quick. The question is, the international tourist arrival drop in 2025. Is it by land or by air? So the total 5.6 million number that we presented earlier are a combination of both air and land arrival. And from what we understand, we've broken down further into air and land. Actually, air arrival see an increase of, I think, if I remember correctly, around 15%. And the land actually has quite a drop, up to around 30%, I believe. So this is, if you can say in total, the number of the contribution of the drop is driven more from the land arrival. Understandably, because of the ongoing the reason border tension, and a lot of tourists couldn't cross over by land, hence were diverted to air or just not coming to Cambodia at all. So that's what we observed. Okay, there's another question very specifically for office in our chat box. I would like to ask about tenant preference looking for office space, whether they need a semi-fitted out or fully fitted out space, while your data indicate the rental rate is over $20 per square meter. Thank you for the question. I understand that the question is asking mainly what the grade A office tenant are looking for. So mainly we have had many cases of fully fitted office. There are cases of semi-fitted and bare handover as well. So each tenant have a very different preference according to their need. So we also noticed that fully fitted out office maybe work better for smaller tenant, a new business that needed to get up and running very quickly, but it's usually smaller space. For larger tenant, especially corporate and MNC, fitted space usually don't fit with either their culture, their use of space, or even from the branding and marketing perspective. So in terms of this, generally we see that MNC, especially larger tenant, prefer to have non-fitted, but addition provision such as raised floor, suspended ceiling, aircon. All these are required by the tenant. I want to drive your attention also, outside, we stressed multiple times during our presentation, outside of this basic or foundation offering, tenants are much more focusing on other factors, not only rent, but also, provision of car park or availability of car park, the amenity. We are seeing newer supply right now introducing a food court or some even gym right inside the office premise as well. So these are becoming more and more of the common norm for new office supply. And I think in the coming year, if older building are not upgrading, we will see even heavier flight to quality from building with basic offering into office that are offering a rich in amenity and even function rooms and even space as well. Okay, so Kim Seo, is there any question you'd like to pick up on? Actually, we have quite a number of questions on residential too. Go on.
Okay, I do have a couple of questions that I want to touch on. So this question is really fun to answer because we have been answering this question for, I think, 5 years already. When do you expect the real estate market to recover? And I want to answer this one. Well, previously we were trying to forecast or predict when the market will recover. After COVID, we believe that the market will go through a cycle where it will try to stabilize itself and it will pick back up to at least closer to the pre-pandemic. But after we have seen and walked through this market for 4 years, we believe that the market, we have to define the word recover. Well, will it recover to pre-COVID period? We don't believe so. We believe that the market will start to see some pick back up in terms of sign of recovery, but it will be a gradual recovery. The product has already been shifted. The market has already been shifted in terms of demand and the supply. So this will be the new recovery where the investment product will start to gain some traction, but it will not be a traction where we've seen a bulk purchase that we have seen in pre-COVID, where sometimes the purchase can be in floor to floor purchase. So yes, the market will recover, but it will not recover as fast as we expected.
Thank you, Kim Seo. And if I may add on, I think a very interesting note from Kim Seo is defining recovery, because the recovery could mean very differently for everyone. And I totally on board with what Kim Seo just mentioned earlier, that recovery that we will see probably is not the same as what we experienced between 2018 and 19, because the market demand has shifted. And I think across the board, outside of the number of supply, that are being introduced. We also have issue with the quality of supply and mismatch of supply, which we are seeing being corrected right now. If you look at the newer supply being introduced, whether considering from price positioning or the quality offering or the amenity, these are answering better toward the user or both tenant in the commercial and residential realm toward the user directly instead of just presenting the FOMO or fear of missing out when the market is pretty hot. You have to build something very quick. So that is changing, and we expect that that will change the landscape of the market. I think it would not probably solve the supply overhang supply immediately because those older or less fitted supply will be forced into changing, whether converting or upgrading into offering something that is the demand of the market. So that's our definition of recovery, and I think we'll continue to see that happen over the coming years. Thank you, Kim Sia. Further on, because this question touched right in the heart of residential market and on what we just mentioned earlier about matching the supply and demand. There's a question from the audience: what is the preferred room size in the current landscape for studio and one bedroom? This is very specific, but I think Kim Sia can give more insight of what is the market demand in the vertical living.
Okay, thank you, 𝗠𝗿𝗀𝗲𝗂. Actually, I've been looking and staring at this question for a while now. So, let's go through this then. For studio, compared to one bedroom, it depends on your preference of what kind of products that you are looking at. Well, if you were to buy this for an investment purpose, I believe that studio is still a very much attractive for this market. The size for studio could be ranging from net area of 28 square meter. Some studio can go up to 30 to 31, some even larger to 35 square meter. So it depends on the projects to project. So please be careful in terms of choosing the size of the product. But going back to the purpose of this, the usage of this unit, if you were to plan to rent this unit for a return in terms of yield, I believe that studio will be a more an easier to lease product. Especially it's depending on the location as well. Will this locate in a central location? Because this rental unit will be very attractive for, especially for those who are coming to live in Cambodia, or you can even do a short-term lease for this product. Why is that? Because the size is smaller, so the lump sum of the rental rate per month is also lower. It's much more approachable in terms of rental rate. Now, one bedroom, the size could go up to 30, 31, 32, 30, 32, or up to 30, nearly 40 square meter of livable area. Now, one bedroom is very much fitted for buy to use. Still, it is very much an attractive rental unit, but it's depend on your preference as well. If you want to invest in a lower capital, maybe go for studio. But if you want to invest for a more long-term, maybe for future self-use, maybe go for 1 or 2 bedroom if you could.
Thank you, Kim Sia, because you already touched on the residential market. Just one additional question. Question goes for condominium in Phnom Penh Center. What current market trend or factor that affect absorption rate and break-even of a project? So you mentioned already unit size is being one of the factor. What are the factors?
Well, for the sector, I believe there are already
What factor make
what factor that
make a
drive
project stand out?
try the project stand out. So there's two factor into the project stand out. I believe in three. Okay, first off is the who is the developer. While developer previously was not the key look into, while right now, after what has happened, the due diligence of the developer is very much important. Now, the reputational developer normally has a much higher absorption rate and faster absorption rate. This is not an easy task to do in this market. You have to start small. You have to introduce yourself as a trustworthy developer. You have to kick off with a smaller projects that is fitting in the market. For a really good example is 𝗟𝗏𝗲𝗏. 𝗟𝗏𝗲𝗏 has been in the market in the past 5 years. They has been ramping up their production in terms of the new products that are being introduced to the market. They understand what the local wants in terms of vertical living. They are targeting the right market. They have been complete their first project. So this is a track record that you want to establish in the market and also want to look into who is the developer that is currently building the product that you want to buy. Now, two, the price. Now, the market is not very much at a trend where we can achieve a rate that match the developer, the investors that's coming into the market. The price has dropped to a more favorable products within the affordable and mid-range. Now, the affordable is very much aggressive right now in the market. Has been influenced by some of the new developer. �11𝗿𝗂𝗧 has been coming into the market with a lump sum price of less than $40,000 per unit, and the unit size is quite large at 35 square meter average. So this product will be pull the price down to, from the normal stable affordable. So the currently market that can be sold out is the affordable and mid-range, where high-end is currently quite struggling. The release in terms of absorption rate is still noticeable in the market, but at a slower rate. But it's still come back to who is the developer. We have seen 𝗟𝗏𝗏𝗏 has launched their new high-end products, which means that it's a signal of from the developer side that the absorption rate is still ongoing. But you have to be a well-trusted developer with their first project has already been completed. And one more thing before you move on is the location. Location is very important for high-rise residential development. If you want to increase the sales ramp up in the project, sure that the location is located in the core or the sub-core area. So where's the core area? Core area for residential is very much concentrated within PKK1, 𝗟𝗏𝗂𝗀 area, and is overextended outward to the east, where it's covering the 𝗠𝗿𝗃𝗃𝗃 area and also moving on to the Usala city as well. While we have spotted that this concentration has been shifted toward the south as well, but not very much further south. So this location has been extended to 𝗏𝗏𝗏𝗃 area. So now 𝗏𝗏𝗏𝗃 area is also a very much hotspot for new upcoming high-rise development, and also very theme attractive in terms of from the buyer perspective as well. So please be careful in terms of the location.
Okay. Okay, thank you very much, Kim Sia, for a very detailed insight. I'd like to address one important question. Actually, we have several similar questions, so I would like to sum them together. The question is regarding the impact of the ongoing crackdown of online scam on real estate. So we have several similar questions, so I would like to sum it up as I would like to share my personal opinion only. I think that for specifically this is a big issue that we have been facing in the last several years, and I think government have put out a lot of effort, especially more recently, more regulation, more policies, and even law was passed just this week in order to guide the especially the involvement of real estate market as the location or supplying location for this kind of operation to happen. So it touched in the heart of a real estate market, and I think we're already starting to see there are more building being vacant as compared to last year. I think the immediate term, the real estate market will take quite a big hit on the rental, both in high rise and low rise, and also in terms of building block as well, because of the chase away of this activity. But I believe that this is necessity, and it's very important for the long-term growth of Cambodia. We do not want this kind of activity to be happen in Cambodia, and I really praise the government effort in clearing out this issue. And I think again, while real estate market is taking an immediate hit this year through rental market, and soon I think we'll also see some ripple effect into buying market, as well as the more secondary stock become available. But I think for the long term, this is good for recovering the trust and confidence of the investor, not only for real estate, but also overall investment in Cambodia. Is there anything you'd like to add, Kim Siek, on this point?
No, but I do see some questions that I want to touch on as well.
Okay, go ahead.
So the question is, how do you see the expansion of real estate market toward the south of Phnom Penh? So I've been written some articles on this as well. Maybe try searching my name in Google. You will see the article from Kitty Post. But I would like to say that maybe not too close to the KTI airport, because these are the high-rise product. And we are expecting the government to come in with the height restriction urban planning map soon to reflect the growth of high-rise development in the area. We already spotted a couple of high-rise development in the area already. One is from Arakawa, Project 2. This project is located to the south, very much to the south of Phnom Penh. And 𝗣𝗂𝗶 has already erected a couple of buildings around that area. However, 𝗣𝗂𝗶 is very much a low-rise and mid-rise development. So in terms of high-rise development, I don't believe that it will move too close to the international airport. It will be going south, but will be located along the 𝗠𝗿𝗶𝗲𝗏 Boulevard road. So that would be the answer to that question. And another question I also want to touch on is also something that we already mentioned before, is how does the completion of high-end condominium affect the rental market for Grade A service department? Now, this is a concern from our side as well. Well, if we look into our neighboring market, the government is very tightly regulated this market, where these two positioning cannot be head-to-head in terms of competition. From our side, we believe or we hope that our government will start to look into this area in terms of regulation, because this is not only to make sure that our market is more healthy for investor and developer, but also to give a clear separation and protect those who are coming to establish or build a service department in Cambodia. Because without this regulation, this market will start to merge together, and this product will start to blend in, and it will impact the Grade A service department rental market heavily. However, as of Q1 2026, we have not seen an impact or head-to-head competition between these two markets, because in terms of service provided from these two products is very much different. For those who are seeking service department, they are seeking a carefree moving in. They are seeking the service that are currently provided in the complex, whereas towards the condominium for rent, the rental rate is very much lower, very much lower. So the entry price is much lower. However, there's nothing in terms of service that's currently offered across those buildings. So it's still quite a clear separation between these two. But the concern is to be expected in the future. One more thing before I pass on to 𝗠𝗿𝗀𝗲 is the question is riverfront condo rare in Cambodia and is worth investing with good yield? Now, I believe the answer is yes. The market is going to keep growing. The condensation of the high-rise building is going to start concentrate within the core area. Now, if we look into a more mature market across the regional, we have seen that the products that's located in the riverfront or along the riverfront is yielding a better yield percentage. Why is that? You can buy your condo in BKK1 right now, but you have no idea within 5 to 10 years moving forward, you have no idea if there's a new complex going to be built in front of your balcony. Now, the view is very important to yield a higher yield. Now, for a riverfront, you have a guarantee that you will permanently get that riverfront view. In a more concentrated high-rise city, such as Ho Chi Minh and Singapore, the view is very important in terms of renting out those products, especially for those who are moving to those cities. So yes, riverfront is very important, and this is the really good opportunity, the time for you to look into a riverfront unit. Buy it now because I believe that this is the rare products that can be offered at this current price in this market. Thank you so much. This is all for me. Pass on to you, 𝗠𝗿𝗲𝗲.
Thank you very much, 𝗠𝗿𝗂𝗃. I'm afraid that because of the time constraint, we'll have to conclude our presentation for this morning. But thank you very much for tuning in, listening to our full presentation for 1 hour and a very engaging Q&A session for another 30 minutes. We have had a lot of number of questions. There's still questions that we couldn't answer, but you have our contact here. Please feel free to reach out to one of our team here for further question, and we'll try our best to get back to you as soon as possible. Just to summary, we will send out this slide to all the audience and our contacts database. But to summary, in Q1, I think we have had a lot of headwinds still in terms of both internal and external challenges. But we have also seen a lot of signs of resilience and especially through the investment market, through the FDI, QIP, through the new launches and new announcement, and also new completion of a project across Phnom Penh and around Phnom Penh. And I think more encouragingly for me and Kim Sia and our team here at APS, what we observe is that supply is starting to answer the question from demand. I mean the requirement from demand, because in the we myself been working at APS for 8 years, Kim Sia at around the same time. We've been seeing a lot of trends. We've been advocating on a lot of points to answer the demand, but the market was just as very hard. So sometimes a developer will have to move faster. So maybe some of the requirement were not answered properly. But now I think that the market has slowed down. Developer have more time to consider and plan and actually do the project in a proper way. So I think that's an encouraging sign. And with the ongoing crackdown of online scams, the regulating more oversight and more stringent in terms of urban planning as well, we see coming up. I believe that it paints a more sustainable picture for setting up Phnom Penh and Cambodia for the next path of growth. So with that, I'd like to conclude the presentation today. Thank you once again for tuning in. We look forward to see you in the next presentation. Goodbye.